It's that time of the month where I give you the top stocks you should be watching or buying. This is July 2026. Let's get into it. All right, so I'm going to be going over my top 5 stocks you should be watching in July 2026. Please give a like and subscribe. I really appreciate it. So this is my list. I got HIMS, Celsius, Salesforce, ServiceNow, and Netflix, right? I'm not going to have you wait a long time. This is my list. And this is their performance. Now, you can look at the 1 month and the 6 month, but what I really like to look at is the 12 month. And people might not like to see this. You don't like to see these numbers if you hold these stocks, but you do like to see these numbers if you're looking to buy the stock and if it's a good company. I believe all of these stocks and companies are good companies and good businesses. And so the fact that their 12 month is pretty bad gives me an opportunity to buy them on a discount, on sale. So that's what I'm doing. So these are the 5 stocks that I have. If you look at, again, the 12 month, you have minus 26% for HIMS, minus 33% for Celsius, minus 39% for Salesforce, minus 47% for ServiceNow, and minus 41% for Netflix. These are all companies you've probably heard of. Maybe Salesforce and ServiceNow, those are not as much of a retail, consumer, but still, even at that, if you're investing in stuff, you've heard of Salesforce and ServiceNow. And so these are the top 5 that I think you should be watching. Now, I'm going to go over them in order that I had. So first, let's go over HIMS and HERS. I'm going to go over exactly what they do and why I believe you should be watching them. So number 1, they're the direct-to-consumer healthcare leader, right? Unmatched direct-to-consumer platform and brand awareness. They're the king. They're also expanding their portfolio from hair, skin, sexual health, weight loss, mental health, all of that stuff, right? So they have diversified solutions for all kinds of things that are happening in the healthcare industry. Rapid revenue growth and profitability. If you know anything about this first quarter, it was bad because of the Wegovy and Novo transition, the whole lawsuit. From here on out, it's going to be a lot better. So if you know anything about that, just keep that in mind. Personalized care and technology. So they are using digital first approach and AI-driven personalization to have consumers, now I'm a customer and they have these personalized details about me, my biomarkers. And so that keeps customers, it's a high retention, so there it is, high customer retention, right? Then 5, increasing lifetime value. They're deepening their revenue streams per customer, right? So their monthly revenue per customer is going up every month. And then they also have future growth catalysts and partnerships, prescription access, retail expansion, employer solutions. And they didn't say anything even about peptides, which is going to be happening in about, less than 20 days, in about 16 days or something like that. That's going to happen really soon, about 2 weeks. So there's a lot more with HIMS than just this chart shows. This is the stock chart. Now, as you can see, it bounced all the way up to 72 essentially, right? So yeah, 72 was the high, but you could say the mid 60s, right? The mid 60s is like the high. That's doubling up from here. That's a double up from here. We're at 36 basically. 36 times 2 is 72. So I guess it's slightly less than a double up, but still, and that's if it gets to its all-time highs, previous all-time highs. What if it goes past the all-time highs, right? As you can see, it had a pretty bad 2025. Just all over the place, pretty rocky, and then it ended just horribly. And then it started the year bad with the Novo deal or the Novo lawsuit and everything, and then when they made the Novo deal, ever since then it's kind of been bouncing back up, and I do believe the trajectory is up, and it's going to continue to go up and up from here. Number 2 was Celsius. You've probably heard of this company. So they have rapidly expanding market share, right? They are taking over the energy drink market, right? Monster and Red Bull, they're right there, but they're the challenger king. They're right up behind them. Diversified product portfolio, Celsius, Alani Nu. They have all different kinds. They just bought Rockstar, so they're expanding their portfolio. Acquisition fueled revenue boost, again, from the Alani Nu and Rockstar, but really the Alani Nu integration, it boosted their revenue insane. Strategic distribution moat, right? So they have Pepsi. Pepsi is their distributor. So that is like, they're basically Pepsi's energy drink captain, you know, and then Coke, they have what? They have Monster, right? Yeah, right? I don't even know. But yeah, I think Coke, right? They're distributing for them. So it's like they, you know, Celsius is using Pepsi, and they're not even hitting international yet. They haven't really even hit international. Five, you have capital discipline and growth investment. So they're very disciplined with their capital, and they're growing. They've bought some shares, but they're also, like, the way they're handling their money is very, and they just went through all these distribution termination fees. So they had to pay all this money to for Alani Nu and Celsius to go to Pepsi. And so now they're finally done paying all these fees, and so all of that's going to help their financials. And then again, future global and occasion expansion, going to international and all this stuff, right? They have Aston Martin, College Campus, and Gym. These are like more sponsorships, but you know, Pepsi is going to help them go international. Now, if you buy this stock right now, you could have bought this stock in September 2021. Could you imagine? You're talking almost 5 years, and you didn't make anything. That's pretty crazy, right? Now, that sucks for the people that bought 5 years ago. Let's just be honest. That sucks. But let that not be us, right? We should be buying. I want to be buying when things are crashing, they fall significantly, and then it's at a point where I could have bought this thing 5-10 years ago at this price, right? Or 3 years ago. That's when I want to be buying. I don't want to be buying really necessarily at an all-time high. I did buy some Micron. I have that in my challenge. I've bought Micron when it's like, it hasn't hit I didn't buy it at the all-time high, but I bought it kind of, pretty close there because I do think it's going to go to 2,000. But besides Micron, Celsius, again, you could have bought it 5 years ago at this price, and, it's here now. If you look at it, it used to be at almost 100. I mean, it just touched, it almost was there, right? It almost hit 100. And it's at $30. It's at 30. I mean, it was in the 60s just recently. What is this? Just in December 2026, November, somewhere around there, right? I mean, it wasn't that long ago where it was double what the price is now. So Celsius, on top of the business, the EPS is going to grow crazy. The revenue, shelf space, so much about Celsius. The stock chart looks very enticing as well. So I think Celsius is a home run, honestly. I think Celsius might be the best one out of this whole group. Number 3, Salesforce. So we have the undisputed CRM market leader, right? They're the clear number 1 CRM brand. So there's no competing against them. Now they have a comprehensive customer 360 ecosystem, from the Sales Cloud, Service Cloud, Everything Cloud, right? The Thunder Cloud, you get it. So they got everything, right? The AI-powered revenue growth. So now they're using AI to power their revenue and power these AI agents. So that's going to be helping a lot. Strategic AI innovation, Agentforce, again, having AI deal a lot with what they do, because this is just like it's a software company. This is not like, where you need a whole lot of hands-on actual people. You need technology to work properly and to work efficiently and quickly and to know what it's doing. And that's what AI is for. So they're using AI to improve their business significantly. And then they're also doing robust capital returns. They have a huge $50 billion buyback program that they're doing. So that's insane, right? Yeah, right here, $50 billion. And then global expansion, multi-industry penetration, right? For manufacturing, financial services, health, and they're going all over the place. Again, they are the number 1 CRM company out there. There's no one else close to them. So, they do very well. And I think they're, going to be a top company to be buying stock. And this is why. You could have bought this 7 years ago, before COVID. Now, obviously, after COVID, you could have bought for cheaper, but it's insane that you could have bought this even before COVID. You bought this stock before COVID. You've seen how the industry, how the world has grown, how we've needed stuff like Salesforce. And yet, what do you have to show for it as an investor 7 years later? 7 years later. Now again, if you're looking at it from the perspective of these people, that sucks. I mean, you were buying at all-time highs. You know, it looks like, you know, for the last 3 years, it's been on this big run, and that's cool. And it still went on it. Don't get me wrong, it still went on a crazy run. It still went on a crazy run. It doubled up from there. It almost tripled up. No, it doubled up. Yeah, it doubled up. A little bit more. But now we're at 166. We're back to 166. The SaaS companies, the software companies got hit very hard. Obviously, everyone got hit hard in 2022. Then everyone started coming back, but then software just got hit so hard. So, yeah, now it's down to 166, which is incredible. So you could have bought this stock 7 years ago for the same price. So that, again, when I see that and the company is really good, the company believes really a lot in itself, so it's buying $50 billion back, yeah, that tells me that's probably a good buy. ServiceNow, this is my number 4 company, right? So they are the undisputed IT workflow market leader, right? So it's just like Salesforce. They are like the number 1 when it comes to workflow and all that. Comprehensive platform. You know, again, it's just like the cloud is the workflows, how they do it, right? They basically can do everything for you in terms of the workflow. They're using AI too. They're a software company. They're using AI. Their revenue's going up. Everything, you know, they have strong subscription revenue, and it's just continuing to go up. And again, strategic AI innovation from the AI agents and everything, very similar to Salesforce, where they're just using all of these AI agents to get a lot of things done. They're also having a repurchase program of $55 billion. They are just, you know, when you have these companies very confident, and, you know, and again, just the same thing, very similar to Salesforce. You know, but when you have these companies buying that much back in their own stock and their revenues are growing and the stock has gone down that much, I mean, to me, and, you know, of course you could say, well, is it expensive? Like, was it just way overvalued at those high prices and now it's just valued correctly? I mean, you could say that, but it's probably a little bit undervalued now. When you look at the revenue, the growth rates, and you look at the PE ratio and all that, you're just like, this company in the next 2, 3, 5 years is going to be way bigger, and not having to use as much money, and they're using all the money now to build the AI, and it's going to do very well for these software companies. That's just my opinion. Another one, November 2020. So now we're talking, you know, almost 6 years, 5.5, 6 years that you could have bought this stock, right? It was right after COVID. And again, granted, it went from 100 to 240, basically. 240. Let's zoom in on this, right? 240. This is right here, 240. I mean, the stock went up significantly, but then it's dropped. With all the other software companies, it has dropped. And so, I mean, don't be ashamed if you didn't buy here. Don't be ashamed if you know, just start buying here. Because look, it popped up to here and then it came back down. And this is why I also like, you know, I deposit $50 a week, and then I buy, you know, sometimes I'll buy 25 of this, 25 of that. Maybe I'll just do 50 of this or 50 of that, you know. And what makes that strategy very fun is that it almost never seems like a bad time to be buying, because you'll have your eyes set on these stocks. And to me, I'm going to be buying in this whole area. This whole area I can buy, you know, ServiceNow. And as long as it's in this area, I can keep buying. And it's going to stay, it's going to bounce around in this area for a while, and then it's going to pop back, it's going to pop up. I can stop buying, hold my positions, you know, and then move on to another set of stocks that I want to do, right? I mean, it's fun. It's fun like that. You don't have to worry about timing it out. You just get some good prices when the stock has been crashing, And then, that's that. So number 5, Netflix. Last but not least. Now, you might have heard about Netflix. They're a dominant market leader. They're streaming king, obviously. They're like the top dog. In fact, if you remember, we have like the Mag 7, right? We all talk about the Mag 7 with NVIDIA and Google and all, Meta and Amazon, all this stuff, Microsoft. But we used to have Bang, which was like Facebook, Apple, Netflix. So it used to be one of the biggest, most talked about stocks out there until these tech companies just came up and then, just did their thing. But anyway, revenue innovation, ad-supported tier, right? So now they're unlocking a wider audience. So now you can have for a little bit less money, but you're getting ads. So on top of you're getting people who are paying a little bit less money, but they're still paying you now, you're also getting money through the ads, which is great. Financial discipline and cash flow, right? They're expanding their operating margin and their free cash flow growth. So they are, the financials are looking great, even though Netflix has been known to be someone who is just like they've thrown a lot of money at productions. They did not do the Warner Brothers deal, which was a huge, that was great. And they got paid. I forgot exactly how much they got paid, but they got paid a lot of money because the deal didn't go through. It was crazy. They got paid for that. They got paid to not make a deal, and they weren't even the seller. It's amazing. Content and engagement retainment, right? So their proven ability to create must-watch global hits. So again, you know about Netflix, you've heard about the movies, they have plenty of awards and high user engagement. They're doing stuff with video games. You can even play games on there. Capital returns to shareholders, right? They have share buybacks, and it's just, when you look at the stock, it is really good returns for shareholders. And then future growth catalysts, like I said, gaming, live events, and sports, which I work for Fox Sports. I've been doing the World Cup. I possibly might be working for Netflix at some point if they really start getting into live sports, because I'm a freelancer. I got to get out there. So I might be working for Netflix at some point. And then they also do podcasts. So again, a very highly, just really well-run company. You know of it. Now, the stock did just bounce a little bit. It used to be just a minute ago, like within the last week, it was at the price that you could have bought in November of 2021. So, but then it completely went on a downhill, right, of 2022. And ever since then, it really, it went on an extreme run. You look at this, you could have bought it at under $20 in 2022. Under $20. That's crazy. That is crazy. But right now, at the current price, you're looking at October 2024. So it's not as much as all the other stocks, right? Where you're looking back like, oh my God, 7 years, 5 years. But November 2021, just a week ago, if we're talking about it, I could have said November 2021. So, take it take it how you want it, I guess. But I do believe Netflix is a great company. I believe the stock is hurting a little bit, but the business is not, and it's just going to continue to grow. So I do believe it is a buy at this time at $75. So again, to recap, my top stocks to watch, July of 2026, we got HIMS, Celsius, Salesforce, ServiceNow, and Netflix. These are their performances in the last 1 month, 6 months, 12 months. I love the look of the 12 months because these are all good companies, but the stocks are not. So I'll take that. So now I'm going to go over the top stocks to watch 1 year later. I have now been starting to reach the point where I've been doing this every month for a year. So now I can start looking back to see how my results are. And I think that's good for myself. I think that's good for anybody watching, because then you can kind of, I wouldn't want to say judge it, but yeah, you can judge me on how successful I pick, right? Because obviously, why are you going to listen to me if I'm picking a bunch of losers? So this is going to be the first time I've done it a year later. And this is about the time that I started my stock market challenge as well. So my top stocks to watch, the results were July of 2025. I had Amazon, Meta, Fubo, HIMS, and QQQ. Now, Amazon and Meta, those are kind of just like typical, hey, these are companies that you can kind of buy for the long run. You know, that was that. QQQ, it's a NASDAQ index, so that was just a stock that I think you could buy and watch, and, you know, just kind of hold on to that as well. Fubo and HIMS were more speculative. Now, Fubo is one that I was believing in the Disney deal, that things were going to go a little bit better, and things have not turned out the way I thought they would. So as you can see, 12-month, 1 year later, since I said Fubo was a buy, it is down 80%. That is not good. Amazon's up 8%, QQQ is up 33%. Okay, that's great. Meta, surprisingly, is down 21% in the last year. That might be saying buy. You know, Meta wasn't, I mean, maybe I could have expected it to kind of just, you know, keep their capital expenditures going, right? Their CapEx is still growing and growing and growing, and people don't like to, we want to see results of this AI. Why are you spending so much money? Where's it? Are we getting money, right? Where's the profits? You know, some of these companies are now, you know, getting loans and doing bonds and doing all these other different things, different ways to raise money that they really haven't done before, which is very interesting and possibly scary for these big tech companies. So Meta hasn't done very well. Fubo, like I just said, is horrible. HIMS, it was a stock that I thought you could watch. Now, after the first month, it did very well. It was up 38%, and then it went down 32%, and then, you know, down 28% because, you know, the whole Novo deal and everything. But this is, again, not necessarily, you know, top stocks to buy. It's top stocks to watch. I'm not here to tell anybody to buy anything, but I am saying, hey, watch these stocks because they could do something. Fubo is an absolute failure on my part, and I've admitted that, taken that accountability. I sold the stock. I said, look, the stock is not doing what I thought it would. I invested a little bit too much into it. I learned my lesson, highly speculative, and just too much capital. I moved on from it, learned my lesson. That was that, right? So, and I'm not here to give financial advice, so just because I say, oh, hey, watch this stock, doesn't mean I'm telling anybody to start buying it. No one should be doing it because I say it. Always do, you know, you could look it up and then make your own decision. But anyway, Fubo was the big loser. QQQ was the big winner, and if you bought the TQQQ, you would have been probably even better. So yeah, please give a like and subscribe. Thank you for watching. If you are still watching, I appreciate it because I don't know how many people actually make it to this part of my videos. But yeah, it has been a crazy, crazy month. If you are all a consistent follower, I have not been posting like I usually do. I've been going through personal stuff. I got World Cup. I've been taking side gigs. I've done some traveling. It's insane. Things are going to slow down now that World Cup is coming to an end. You know, college football and NFL are next month. All I have right now are some baseball and some other stuff, so I'm going to be kind of slow. So now I'll be able to pick up some videos again here and there, but I do appreciate anyone that is still watching, anyone that gives that like and subscribe if you're watching. If you're still watching right now, you're most likely a subscriber already. But anyway, yeah. Thank you. And yeah, never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.